Welcome back. Well, the markets did take a bit of a knock, but if you're looking at the Nifty itself, there's been some bit of recovery as well from the lows. So, just if you pull out the lows from the day, I think it's moved down and recovered close to around 50 points off the day's low. So that's encouraging, actually. So we've defended the lower levels. I think 19,920 odd. That's the level from where we pulled back in the last few minutes or so. But as promised, Rahul Sharma, Director and Head Technical and Derivatives at JM Financial Services, joins us on the show. Hi, Rahul. Good morning. Thanks so much for joining in. Well, today a bit of a down day or maybe some kind of profit taking from the top. But the uptrend, you would say, is still intact? If yes, how do you approach the headline index?
Yeah, good morning, Nigel. So probably the party in the mid and small caps has, just ended with the cut today. We have very boldly given a switch hit from small caps and the lower mid caps to the large caps. I think, what would happen in weeks has happened in days as far as the Nifty movement is concerned in the last few days. But the re-entry point, if somebody has missed out this rally, could be a minor dip that we are expecting from these levels. So we've gone from 19,400 to 20,000. 19,800, maybe 19,650 best case scenario seems to be good levels for re-entry for the rest of this month. And the next leg of the rally that happens, we are expecting Nifty to test 20,432 on the upside. So I think this is still a bull market. This is still a very strong primary uptrend. September is expected to be, bulls favorites, if I may call that, and dips are to be bought into. So clearly look to re-enter at key support levels and clearly book profits in mid caps and small caps where we've seen a phenomenal rally happen in the last few weeks.
Okay, book profits in mid caps and small caps, but otherwise you stay invested in this market for the long term, right? That's the view. So in the large caps, I think the common narrative now, Rahul, is that move your money out of mid caps and small caps and into large caps. So within the large caps, where do you see the leadership emerge from?
Yeah, so we feel the new leadership, we've seen IT remain very strong, but the new leadership is emerging, especially from the banking led by PSU banks. So we feel PSU banks can do well. You have financial services, which was negative, has turned positive in this month. And lastly, the energy sector has seen a revival of buying interest. So, two pain points in the previous month. One was the banking and financial sector has now turned positive. And you had Reliance, which was under the pressure previous month, which was keeping the index low. Both of them have turned positive. So broadly, I think it would be a rally where the index heavyweights do well. We are expecting both the banking and financial services index to sort of reclaim their previous highs and at the same time be selectively bullish in terms of the index components as far as the laggards are concerned. So, clearly, the Nifty 50 space is our favorite bet at this point in time, led by these top three sectors.
Okay. If there's a bullish outlook for the Nifty and the Nifty Bank, you want to help us with any individual stocks that you like where you can either have a positional trade or where you see a bullish trend for the near to medium term?
Yeah, so a couple of stocks. One stock that we like on the banking space is IndusInd Bank. It is one of the relatively stronger private banks in the space and can easily see another round up move of around 8 to 10% in September. On the auto space, Tata Motors is one pick that we like. It has completed its correction and now we feel that the stock is ready to get into a new trajectory, possibly around the 700 plus mark. So Tata Motors on the auto side, and lastly on the PSU bank space, Canara Bank looks pretty solid. In fact, it is a high beta play as well and can see itself heading towards a new life high and possibly around 10% upside from current levels. So selectively, from the PSU banking space, Canara Bank is our top pick, followed by the likes of SBI and Bank of Baroda. So
yeah, go ahead.
Yeah, so one thing that we like from the consumer durable space is Havells. In fact, Havells has seen very aggressive price action on Friday. After that, it's seen a bit of a cool off, but it is a multi-month breakout that we've spotted, along with a very strong expansion in volumes. We could very well see the stock heading towards 1600, even 1800 in the next 3 odd months or so. So a massive breakout is at play in this stock, particularly from a monthly time frame, and investors can participate this up move, by buying it in delivery.
All right, Rahul, crude oil prices spiked up and a couple of stocks, could get hurt. That's Indigo as well as Asian Paints. But now, in fact, maybe crude oil prices are topping out. If that's what you're factoring in, then do you think it's a good time to buy into both these two names?
Yes, absolutely, Nigel. So crude oil has lost steam in terms of the up move. So technically speaking, Brent oil has given signs of bearish divergence. What that means is we could see a pullback in crude oil prices, which means the typical favorites which benefit from lower crude oil prices. One is Indigo and second is Asian Paints. And especially with the festive season coming up, especially with the T20 the Cricket World Cup coming up, we could very well see the aviation sector do very well. So we are very bullish on interglobe aviation from like a 1 month perspective. At the same time, Asian Paints could also see a revival from current levels. So crude related, I think these two are the bargain picks which can do well going into the next few weeks.
Okay, all right. We'll leave it at that. Thanks a lot for joining in and giving us, an update on how the charts are looking and the way forward from here. So the summary is that if you're sitting on mid and small caps, perhaps it's a good time to take profits. But for the larger caps, the runway, it's a long runway in this market. Let's